Global Markets Reporter at Nasdaq. We're coming to you live from Consensus by CoinDesk in Austin, Texas. And joining me for this segment, we have Katie Talati. She's the Director of Research over at Arca. We're going to cover a number of the hottest topics in the blockchain and digital asset space. Katie, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
Let's talk about Chainlink announcing it would launch staking as part of Chainlink Economics 2.0. What's the significance of that?
It's really significant. So for those who aren't familiar with Chainlink, Chainlink is a price oracle feed. So smart contracts, because they operate on a computer system, they need inputs generally from the outside world. So Chainlink basically feeds in those oracle feeds. However, to date, people who feed in those oracles, they don't have anything at stake. And so by introducing staking of the Link token, not only does it reduce the circulating supply of Link token, it also means that there's more security in the Chainlink price oracle network.
And wireless networking project Helium introduced a Helium improvement proposal. Tell us about that.
That's actually really interesting. So basically what they decided is they've mostly been trying to go after the IoT market and within telecom. And basically they decided to kind of segment their business out and create sub-DAOs for each area of wireless that they want to go after. So they're now going to do IoT, VPN networks, 5G, Wi-Fi, and it just really expands the total addressable market for the Helium network.
What about the ICO space? I haven't heard much lately.
Well, no one calls them ICOs anymore, right, is the first thing. They're all usually it's initial DEX offerings now, so trying to do them on more decentralized exchanges. I mean, look, there's been a lot of regulatory uncertainty with ICOs, and so it's really tough for every token company that I talk to that wants to issue a token for the first time. The biggest hurdle for them is making sure that they can give it out in a regulatory compliant manner. So a lot of them aren't raising anymore. They're doing airdrops, they're doing reward farming activities and stuff like that, trying to make sure that they first of all can maybe get out their token in a more distributed manner as well.
Tell me about bonds for DAOs. This is the first time I'm hearing about it. Porter Finance launched its first product, a convertible bond for Ribbon Finance. How does the bond DAO market work?
So that's also super interesting. So a lot of DAOs are centralized autonomous organizations. Their treasuries are mostly composed of their own tokens. And so basically a lot of them, they need actual cash loans for working capital, right? To pay their employees, to pay for audits or any outside services. Like most of them won't take, a company's individual token as payment. So these bonds essentially allow a DAO, as a decentralized autonomous organization, it's not a legal entity, the ability to take out a loan against their treasury value so they have working capital.
Now tell me about the ETH 2.0 merge. I keep hearing that something is happening with Ethereum.
Yes, I mean, it's super exciting. ETH 2.0 is basically the move from proof of work to proof of stake, and that is going to be huge. For Ethereum, it's going to mean that we're potentially going to have a slightly faster network. There's going to be more security, and we're going to go from mining to proof of stake. And it kind of means that there's going to be more Ethereum locked up, and the yields on Ethereum people are predicting might be fairly high, anywhere from 8 to 15%, are some of the calculations I've seen. But that's a really exciting, I think, milestone in Ethereum's roadmap.
So when I think of Ethereum, I think of the technology that is underneath all of this. Are there competitors to Ethereum? Are there other types of projects that this can be built on?
Yeah, I mean, look, the beauty of digital assets, and we can see it here at Consensus today, is there's just so many more projects, kind of learning from what Ethereum did, trying to iterate on it better. I mean, I honestly don't know which smart contract layer 1 platform is going to do well in the long run, but you have Polkadot, that was started by Gavin Wood, one of the Ethereum co-founders. I mean, Charles Hoskinson started Cardano, also an Ethereum co-founder. But now we have newer chains, we have Solana, we have Avalanche, and they've really proven that they can kind of take the technology that next step. I don't really know though how they're all going to evolve in the future.
Right, because one thing we've been discussing too is interoperability.
Yeah,
that seems to be key to figuring out how this all works together and kind of shake the outliers out and figure out what this ecosystem looks like. Granted, it's still a very young asset class, if you will, but I think interoperability is really what's going to be key here.
Definitely. I mean, and some of the stuff we're looking at is things in the bridging space, so bridging between these different layer 1 chains, looking at multi-chain solutions like Atom, like Polkadot, other kind of projects like Layer 0 that are trying to even go the layer beneath, the layer 1s. So there's a lot of really cool technologies out there. I mean, they're all in experiment phase, honestly. Right. So very early.
All right, Katie, appreciate the insight. Thanks for joining us on Trade Talks. And Jill Malandrino, Global Markets Reporter at Nasdaq. All right.